At work, I'm Oliver Manick. We're here with the Morning Trade Live Market Meetup panel. We got to talk midterms because now that we've got the results in, well, I guess there's like one race that's still kind of hanging around. But for the most part, Democrats back in the House, Republicans held on to the Senate, Donald Trump is still the president, and the market is up. So we got Scott Bauer joining us, CEO of Prosper Trading Academy, ahead of Fast Market. Scott, great to have you. As always, Stephanie Lewicki, Senior Manager of Futures and Forex at TD Ameritrade, and Nick Theodorakis, Financial Risk Management Director here at TD. Stephanie, start us off, okay? Because on the futures side, I mean, SPOO's kind of got shaken up and then popped coming into this morning. So I guess the old gridlock is good is playing out, or the 10% midterm bump is playing out, or just uncertainty? What's going on?
I think finally the markets have some certainty, and that's why this market is the indices are bid like they are. You know, it's interesting to watch as we talk about the futures market. Last night, watching the market, not quite as exciting as when President Trump got elected, but there was still some activity, mostly all bid activity, really strong coming into this morning. Again, I think it's a certainty. What was expected happened. You know, split between House and Senate. So that's the market's looking at that as good news for right now.
They finally, you know, the predictors in the polls, they got it right this time, basically.
Yes, it wasn't the unexpected like Brexit and like Trump. So
maybe not the actual number. I don't know. Everybody's got their own estimate. But I mean, they got the flip to the Dems, the wave or the splash or whatever you want to call it, Scott. To Stephanie's point, you have something that was expected. But many times when something's expected, you get this old sell the news thing. Guess that didn't apply today. Was this market just eager for some kind of catalyst to kind of lift off a little bit?
You know, I really think it is. And you and I spoke about this earlier, Oliver.
Yeah.
And I'm pretty skeptical at just the reaction today. This is what everyone expected, like you said. And I think that you're getting people into the market right now not really understanding the market dynamics. Now, I'm not saying that this is a negative for the market whatsoever. But when I see the VIX down where it is today, just because the midterm elections are now behind us, that is concerning to me. Now, you can make the other point of that and say, well, the VIX was trading 20 plus because of the midterm elections, so now we're back here. But listen, the bottom line is there's still gridlock. The headline risk to the marketplace is still there. The geopolitical risk is still there. The Brexit issue is still there. And probably most importantly now, which we just touched on off air a little bit, the China tariff issue is there. And there's many pundits out there on both sides saying, well, the Dems are going to come in and they're going to be able to moderate President Trump, versus the other side of the coin where President Trump now really has to even, you know, lay the rhetoric out even harder because he's got to, you know, make his stance.
And the tariff stuff is, is something that so far has kind of been embraced by some of his opponents as opposed to just about everything else, right? I mean, it's kind of been, you've had Chuck Schumer saying, yeah, you know, we can't get away with IP theft and all this type of stuff that then might embolden the tariff side. I want to point out a few specific things here also. You've got a few very specific election and ballot type stuff too. DaVita, for example, the kidney dialysis company. George and I have talked about the upcoming vote for Proposition 8. So that stock pops on a vote that's in its favor for a very specific item. You've got things like United Rentals then on the other side, which I guess is now up because we think there's going to be an infrastructure plan with the Dem-led, Congress. So, Nick, look, we're not political analysts, but what I've seen with United Rentals now is a stock that basically gave up pretty much all of its 2017 gains. People expected a big infrastructure plan from the administration, and now it's like we're doing this story. We're playing this game again.
Well, I think it's at least for the day overall, it's a sell the vol news, right? I think there's some certainty for some of these specific stocks. I'm a little bit interested in. I think housing's another one that's a really interesting time right now. With URI, I think that I'm looking at the quotes here. I think it's a really interesting play, and maybe this is an area, right? And like you said, we're not political analysts, but maybe this is an area where we can really find common ground. Infrastructure needs to be dealt with, and I think that's a common feeling regardless of who you talk to and who's in what seat. There are a lot of infrastructure issues in this country, and I think if there's going to be gridlock in a lot of things, maybe this is one of the areas that we can find some sort of common ground and get a few things done.
Which is interesting because you also then had bonds bought and the dollar lower, which doesn't really sound like a response to spending. Now I get there's already been spending from the administration on the tax cut and stuff and the deficit running up, Stephanie, but to Scott's point, I think that's also basically a weird move given all of the macro backdrop for what has forced the dollar higher and kept it there, and what has pushed yields higher? I mean, do any of these things change, now?
Yeah, normally the dollar is maybe your flight to safety. So the dollar's down 0.6% I think this morning. And when you think about some of the different industries, and you said tax cuts, and there aren't going to be probably any more tax cuts that
Right,
are
that 2.0 is going to be tough.
Yeah, that's going to drive up consumer confidence like it has, and drive up some of these other good economic data points that came out. And for Trump to get anything done, not anything done, certain initiatives that involve businesses, it's going to be harder. There's going to be more roadblocks. The one I really was focused on is I always forget the name, the new NAFTA.
USMCA.
Yes, so that they agreed on.
NAFTA's okay, Stephanie.
The new NAFTA. So that they agreed on something, but it still has not passed. It hasn't gone through Congress, and that probably won't happen until the newly elected House next year. So in the interim, there could be roadblocks. Companies are trying to make investment decisions on that. So with that and with the trade tariffs, there still is, like Scott said, I think this is a little bit of overreaction, because I think there still is a decent amount of uncertainty with a lot of the other issues that are going on right now.
It doesn't feel like they're really going to be a dramatic change in Trump's opinion of tariffs, but it does feel like
soybeans are lower this morning, and they're like one of the most pure tariff China read-throughs I think in the market.
It just feels like there's checks and balances, and maybe that's the dollar reaction. The dollar was lower against almost every major currency out there today. Maybe that's what we're seeing here. Is it's not going to slow down the president, but it really does, put some checks and balances, and I think that the emerging markets reacted positively to that as well. And maybe you're starting to see some hope of at least no new tariffs coming on and an easing of that.
I think the one market you did see, Asia, China, was down overnight, and that was the one market that reacted, I think, what we would say, how it should, in fear that Trump is really going to now double down on tariffs.
Interesting. All right, so you've got some opposing sort of interpretation of this, which I think is kind of the point, which is like, look, if you bet on the political stuff, which is our message yesterday, it's about as risky as a game. Markets are hard enough to figure out already, and then you can want to assume that you can understand the political read-through. Scott, when we look at this, I mean, none of the big issues here. Obviously, we're going to have a lot more actual concrete evidence that something's shifting to really change the trajectory of some of these asset classes, I would think.
Which, you go to the market psychology part of trading, and that's the part that I'm very interested in right now, because like you just said, Oliver, nothing has changed yet, right? So the elections are behind us. That uncertainty is gone, but we haven't seen the landscape change yet. So that's why I still think there's going to be this added volatility in the marketplace. And what is so interesting to me from a logical perspective, one would think that gridlock, stalemate in Congress in Washington wouldn't be a good thing, but when you look historically,
we constantly hear this.
When you
the data supports it.
The data supports it, and that's just a really odd thing to me. But the data does support that.
Well, it's also like such a case-by-case specific basis. I mean, again, when it affects markets, this is when we have to talk about some of these big political issues out there. Is that if there will be volatility. We've seen moments in stocks before where if there's any, headline grabbing thing on the Russia investigation, if there's a Mueller thing that comes through, we've seen the market react. Now, all of those have the market has basically blown past it and said that they're not concerning yet, but something like that, which of course, when you read all the analysis today, it's front and center. It's another risk too from sort of an unknown standpoint. So in that sense, the gridlock, maybe there's not gridlock.
Gridlock allows the markets to focus on economic things, right? Yeah. It takes those headlines out, because if nothing's happening, and then your actual data points become more and more important. I think it's a little bit understated what the reason gridlock is good. It doesn't mean the country's getting better. It doesn't mean we're advancing the infrastructure conversation from a minute ago. It just means that political items aren't making headlines, and that kind of lends the headlines to be more economic related, which the markets tend to take more in stride.
I could get on board with it. It's interesting basically because you've got, as we talked about, some of the higher level asset classes. We've got the bond move lower, but does this change anything from the Fed? I mean, we've got stocks up, but Does this change anything with the 9 percentage point drop in earnings growth we're supposed to get next quarter? These are the things I think, Scott, that we could basically continue to grapple with that have probably been that volatility driver. We could be wrong. Maybe it was about midterms. I don't know. Maybe VIX will go back to 12 and it'll sit there for a month. But to your point, logically, it's hard for me to get on board with that.
I completely agree. Yes, the major uncertainty that was at the forefront is now behind us. The market doesn't like uncertainty. That's a good thing. But there's just still so much out there.
There's a lot.
Yeah. All right, guys, we're going to talk a little housing here because we basically got another mortgage app number that comes in pretty weaker than expected. It's like you basically just can't get past this. And a lot of this is kind of connected if we start thinking about rates and stuff. But unless there's just unless this midterm bond rally goes on for like another, month, Stephanie, the story for housing may not be changing anytime soon.
Yeah, Oliver, right. We had MBA mortgage applications come out this morning at a 4-year low. But I think what's the interesting part of this is some of the home builders reported earnings the 4th week of October. And 3 of those companies, now the home builders overall are down 20% on the year, but 3 of the companies, I'm going to name them, Pulte Homes, Ameritrade Homes, and LGI Homes are all up over 15% since they reported earnings, and they all said they're not seeing slower growth. So it's really this interesting dynamic that's going on as we're seeing some of the economic data points come out and say housing is slowing down, mortgage applications are dropping, 30 years at 5.15%, its highest rate in X number of years. But you do have some of these home builders that just came out in the last couple weeks saying things are still looking pretty good. So with the bad economic data or negative and these good home builder earnings, I'm curious to see how we play out through the end of the year and into 2019.
There's a totally opposing message between the home builder CEOs are telling us, what the data is suggesting, and what the economic bears are interpreting that data as.
I think one of the interesting things, they all guided very well, right? You see these big rallies and they're guiding it. Some of this comes from cost cutting and more efficiencies and better technologies in those companies. I do think there's an underlying story of market weakness as the numbers showed this morning. 4-year lows and the interest rates only add to that, right? We kind of got this unemployment picture last week where it looks like, there's a really strong case still in the Fed's eyes to raise rates. That is going to hurt the housing market. There's no way around that. It's always going to be the case. But these companies that are doing well, we talk about this all the time on here, like they're finding ways to sort of manufacture profits in a pretty tight environment where the overall market is tightening.
Yeah. Scott, at what point who do we trust in this situation? Do we trust the CEOs of the companies we're looking at right now that say, hey, everything is good. We got a little bit of a slowdown here and a pocket of supply that doesn't work for what the market needs, but everything's going to be okay? Or do we look at the data and we go, this mortgage app number just is falling like a rock basically for 6 months?
You have to look at history, and I think the data has to take precedence over what you hear the rhetoric coming out of some of these CEOs. Now, that being said, 6 months from now, if we see a continuation, Stephanie, in some of these stocks, like you said, that have rallied off the bottom here, if we start to see that, great, then maybe I start believing that. But I'm not going to believe it because we're 10% off the bottom or we've seen just a few of these stocks rally a little bit.
Yeah. All right, we're looking at the market continue to climb. Home builders under pressure, but just to keep this going because the rally's kind of taking shape here. Nick, 1.9% higher. We were talking about some of the overall macro lift. You could also kind of go through the sectors, and I think the sort of midterm bounce idea almost breaks down a little bit. A lot of times you think about the defense companies as being sort of Republican-oriented stocks. We see them rally in the wake of in the election, and today I was reading articles, all right, well maybe now these will be under pressure. It's not the case. They're up. There's just a broad sort of rally happening in the market.
Yeah, I think Scott said this earlier, and I think it's spot on. Nothing's happened yet, right? Like there's a bit of a sell vol. Everyone takes a deep breath. We've been in a really volatile period, in the last month, given where we've come from over the last, 2 years, right? So everybody, I think, is sort of looking at this and going, okay, relax, let's sort of reset and see. I'm a little surprised we're up as much as we are on this rally is holding to this point, but it is almost that sort of take a deep breath kind of day. Yeah. There's a lot of sectors, and I have to give credit to Bloomberg. I think they put a great article out about this morning, just talking about where the sectors may fall. They kind of pulled together all the pieces of where stocks might win, where stocks might lose, and I think there's some some really well said things
I think
in
the
there.
financials case is pretty interesting with different leadership in the financial committee
The
now.
financials, and I think pharmaceuticals is really interesting, right? And gridlock is one spot. Pharmaceuticals is one spot where gridlock might really win, because there's probably not a lot that's really going to happen with drug prices over the next 2 years, given the fact they're not going to be able to make sweeping healthcare changes. So I think another one that came out of that was marijuana stocks, right?
Right.
With the rotation and the governors and where
We had some
stocks
approvals, we
are.
had some
That's right.
disapprovals on the ballot. We talked about this earlier coming into this, Stephanie. I mean, you have a couple votes basically, but the overall takeaways, I think Alex put it yesterday, is look, it feels like the entropy and sort of the momentum, rather, is in a direction towards that recreational legalization. We pretty much got most of that yesterday.
Yeah, I think with Michigan, that's big. First one in the Midwest, first state in the Midwest to get approval for recreational use. It's close to Canada. They might have felt they had to do it after the legalization in October. What's interesting to me, and we did see the market is rallying, but a lot of the marijuana stocks are rallying right along with it on that news. 3 out of 4 that were up on the ballot did pass, and I think what was surprising to me is the tax rate that Michigan is going to put on marijuana is 16%, which is relatively pretty low, where Oregon or Washington has the highest at 47%. I think maybe seeing, if you look through that tax rate being at 16%, maybe they're looking at there's going to be more competition, and that federal legalization is not far away.
Yeah. Scott, last thought here real quickly. I mean, is it just basically wait to see sort of how this shakes out, what the dialogue is after new leadership comes into Congress?
Going to the marijuana stocks here, Illinois is probably going to be the next state up, because with J.B. Pritzker winning, that's actually one of the top things on his agenda is actually to legalize. It's obviously already legal, on the medical side, but to legalize recreational cannabis here. So it's a big momentum trade right now. I still think it's kind of far away to get to the federal level, but in terms of state by state, there's a lot of momentum, there's a lot of tailwinds behind it.
All right, so the specific stuff right now, the most meaningful. Okay.